Welcome to the Deep Dive. Today we're digging into the UK economy. We'll look at where it stands right now, where it might be heading, and the big plans the government has. Our analysis draws on some detailed work, including expert takes from the UK economy, current status, and future trajectory. Our mission really is to pull out the key nuggets from all these figures, forecasts, and policies, so you can walk away, well, feeling properly informed, maybe even with a few surprising insights.
Yeah.
Okay, let's unpack this.
Yeah, and what's fascinating here is how all these bits and pieces, inflation, investment, even, your own shopping habits, they all weave together. It creates this really complex picture, doesn't it? But actually, it's one you can get your head around. Understanding it isn't just for economists. It's pretty crucial if you're trying to navigate things right now and what might come next. It helps make sense of everything, really. Your budget, market trends, the lot.
Oh, absolutely. It puts so much into context. So, okay, let's jump into the current situation. The latest figures from June 2025, we've seen the UK economy manage some growth, a modest bit. GDP ticked up, more 0.3% in the 3 months to June. And the striking thing, perhaps not surprisingly for the UK, is that this growth is mostly coming from the services sector. Given that's the biggest chunk of the economy, what does this services-led growth actually tell us about, the underlying health, the structure of things?
You've hit on something really crucial there. The fact that services are driving this, it's a bit of a double-edged sword for the UK, isn't it? On one side, it shows our strength. Areas like finance, tech, professional services, they often hold up well. But it also points to a potential vulnerability, maybe a less diversified economic base. If demand for services faltered or other sectors lagged, that reliance could, hold back stronger growth. It's a strength that needs managing, definitely. Now, if we look at inflation, CPI was 3.6% in June 2025. That's still, quite a bit above the Bank of England's 2% target. So understandably, the bank is being very cautious about cutting interest rates. It's a tricky balancing act for them. They need to control those price rises without completely stifling the fragile growth we are seeing. Right now, it looks like inflation control is the priority.
Right, so the bank's still very much in wait-and-see mode, putting inflation first. Okay, let's shift from prices to people. The labor market, this has shown some really interesting, almost contradictory signals, I think. On one hand, signs of cooling, right? Unemployment's crept up to 4.7%, and payroll employment has dipped. However, and here's where it gets really interesting, despite the job market softening, wage growth is still, elevated. That seems like a real puzzle, doesn't it? What's going on there, and what pressure does that put on businesses?
It's a huge challenge, absolutely. And maybe not as counterintuitive as it first looks. High wage growth now could be a lagging indicator. Wages often take time to react, Or it might point to specific shortages, tightness in certain sectors, or for particular skills, perhaps, where firms are still fighting for talent. They'll pay up to keep staff. For businesses, though, it's a real squeeze. Higher wages hit profits, make it harder to invest, manage costs. It can even feed back into inflation itself. And it adds another layer of difficulty for the Bank of England, too, as they watch to see if these wage pressures will actually ease off. And speaking of pressures, the UK's trade deficit is still there, and it's actually widened $17.1 billion in the 3 months to May 2025. That means we're importing a lot more than we're exporting. That widening gap can drag on growth, signals maybe competitiveness issues, or strong domestic demand pulling imports in. This raises an important question. Why aren't our exports quite keeping up? Then you look at consumers. Retail sales saw a small rise, yes, but consumer confidence is still stubbornly low. And that reflects how households are really feeling the pinch from high living costs. People might buy essentials, but they're cautious about bigger spending, very cautious about the future.
Yeah, it's definitely a picture of mixed signals, isn't it? A bit of a tug of war. Some resilience, but real struggles too. So what does this all mean for the future? Let's shift from today's data to the projections. Forecasts from places like the British Chambers of Commerce, EY. They seem to paint a picture of slow but steady growth ahead. What are the specifics? So what does this all mean for the future?
Well, looking at 2025, the general view is for pretty modest GDP growth, somewhere between, say, 1.0% and 1.2%. And it seems like that kind of modest pace is set to continue, around 1.2% in 2026, maybe picking up a bit to 1.5% in 2027. So improving, yes, but certainly not, a boom. And crucially, just like now, the services sector is expected to be the main engine behind that growth. It's the bedrock, really, which just underlines how important that service-based economy is for the UK's prospects.
Okay, so slow and steady seems to be the phrase, led by services. But what else should we be watching? What other drivers or potential challenges could shape things? I'm thinking about business investment specifically. That's usually a good sign of confidence, isn't it? How's that looking, especially with those high labor costs we mentioned?
Business investment is definitely critical, and it's a bit of a mixed bag. We're actually projected to see a rise in 2025. That seems to be helped by a surprisingly strong start to the year, which is positive, suggests some underlying confidence. However, that investment growth is then expected to slow down quite a bit in 2026. And that slowdown seems linked to a couple of things: those higher labor costs, squeezing margins, making firms perhaps more hesitant about big spending, and also just lingering global uncertainty, trade tensions, geopolitical stuff. It makes businesses cautious about long-term bets. It really shows how linked we are to the global picture, doesn't it? What happens elsewhere can quickly impact UK growth. On a slightly brighter note, the outlook for inflation is improving, which is good news. It's expected to fall gradually over the next few years, potentially reaching 2.2% by the end of 2026. And maybe, just maybe, hitting that 2% target by the end of 2027. So monetary policy seems to be working, just, slowly.
That improving inflation picture does offer some hope, some potential relief down the line for households. So, given all these moving parts, the current situation, the forecasts, those global headwinds, what's the government doing? What's the strategy to try and, stimulate growth and improve living standards rather than just reacting?
They're trying a few different things, pulling several levers. On the tax side, fiscal policy, they've brought in cuts to national insurance contributions. For listeners, that's a tax on earnings funding state benefits. So cutting it aims to make hiring slightly cheaper for firms and boost take-home pay for individuals, hopefully spurring some spending. They've also made permanent what's called full expensing. This lets businesses deduct the full cost of things like machinery from their profits straight away, a big incentive to invest. But, and this is an important but, there are also planned spending cuts in some other public service areas. And those cuts might actually cancel out some of the boost from the tax cuts. So the overall picture might not be quite as expansionary as it looks at first glance. It's a bit mixed.
Right, so it sounds like a balancing act. Targeted incentives alongside some constraints, not just opening the spending tabs. You mentioned the government's broader growth mission. What's the thinking behind that? What are the main parts of that strategy?
Yeah, the growth mission has several pillars. It's fundamentally about boosting productivity, getting more output for the work we do, reforming the economy, making it more competitive, and increasing investment overall, both public and private. A big part of this seems to be developing a new industrial strategy, which isn't just general support, it's more targeted. It's about identifying specific sectors seen as key growth drivers like information and communication, utilities, research and development, R&D. The idea is to create the right conditions for these specific sectors to really thrive. Through regulation, investment, skills, hoping they'll pull the rest of the economy up. It's a bit more hands-on, perhaps.
So strategic bets on key sectors for the future. That makes sense. But it looks like they're also focusing on sort of the basics, the foundations. I've seen talk about infrastructure and housing. What's the plan there, and how does that fit into the growth mission?
Absolutely right. It's both high growth areas and the fundamentals. There's a stated commitment to speed up infrastructure delivery. That's things like transport, roads, rail, but also digital connectivity. All essential for productivity, for businesses to operate efficiently, reducing bottlenecks, basically. And similarly, there's a big push on increasing home building, trying to tackle those long-standing issues around housing availability and cost. A better housing market helps people move for work, supports household wealth. It's pretty fundamental for economic stability and growth. And if we connect this to the bigger picture, we have the net zero transition as well. The UK is often seen as a front runner here, which is positive. But the analysis suggests more policy effort is needed, particularly in some tricky areas. Things like reducing emissions from our homes, residential housing. Retrofitting millions of homes is a huge task. And while the ambition's there, the policies to really make it happen at scale might still need, beefing up.
Okay, so we've covered the current landscape, the forecasts, the government strategies, from those tax tweaks to big industrial plans and infrastructure goals. It's been a really helpful deep dive. Gives a much clearer sense of all the forces at play, doesn't it?
Indeed. And it leaves us with something interesting to think about, perhaps. A final thought for you, the listener. Given these quite ambitious government plans aiming to boost growth, investment through policy, how will they actually fare against that backdrop of, stubbornly low consumer confidence we talked about, and those global headwinds that are always blowing? What role does individual spending, individual confidence really play when these large-scale policies are put into motion? Can government action alone really turn sentiment around if households remain cautious? It's a really complex dynamic, and how it plays out will probably define the UK's economic story for the next few years.
That's a great question to ponder. A reminder that economics isn't just abstract numbers and policies, it's about how those things intersect with real lives. Real decisions made by households and businesses every day. How might these factors impact you directly? Something to think about. Thank you for joining us on this deep dive. We hope you feel a bit more clued up and ready to follow the UK's ongoing economic story. Until next time.